nobody has told you that you can buy a house and have a $2,000 payment because your rent is $2,000 a month, you need to run, and you need to run fast. Let's talk a little bit about why your mortgage payment is probably not going to be your rent payment. Hey y'all, I'm Joy. I'm a loan officer here in Charlotte. I've been a lender for 9 years. I have never seen the market this bad ever. It's horrible for a lot of people. But the biggest reason why the market is horrible is because home prices are so high. It used to be back in the day, you know, they would say, oh, well, it's cheaper to buy than it is to rent. Which, I mean, we could talk about that and debate that another time. But in theory, if you compared payments to payments, you would get more space and more bang for your buck by purchasing a home and having a mortgage rather than renting in some cases. That's not true anymore. And I want you all to understand what we calculate when we're looking at calculating your qualifying debt to income ratio for what you can afford. So if you have a pen or a pencil or a calculator, go ahead, grab those things, put me on pause, and then come right back. So whenever you go to rent an apartment, they're going to ask to see your most recent pay stub. They're going to look at your pay stub based on whatever that payment is for the month, however much you got paid for the month. And they want to see if you made 3 to 3.5 times whatever the rent payment is. So for example, if you go to ABC Apartment Complex and ABC Apartment Complex says that you need to have $6,000 because the rent is $2,000 a month, you're like, yes, I meet that requirement. You sign your lease and you might pay $2,000 up front as a deposit, and you're off on your way. And then you get to the end of your lease and you're like, well, God, I'm used to paying $2,000. Like, I think I need to buy a house because I don't want to rent anymore. Like, renting is just, this is too much. I can't put my $2,000 a month toward paying something for somebody else. I want my own. Well, here's what you need to determine whether or not you can afford $2,000 a month in a mortgage. The first thing that you need to do is you need to determine what your salary is, okay? So if you are an hourly wage earner, you need to take whatever your hourly earnings are, and if you work 40 hours a week and you work every week and you know you're a full-time employee, we will take that as 2,080 hours, okay? So let's pretend you make $30 an hour. We're gonna take 30 times 2,080. I don't know, can you see that? Yeah. And I got $62,400. We're then gonna take that number and we're gonna divide by 12 to come up with a monthly number. And the number I got was $5,200. I'm going to stop there. Now, if you're not an hourly wage earner and you're just salary, great for you. Just look at your annual income. You need to evaluate whether you are getting paid twice a month or like every other Friday. Because if you get paid 26 times, that's 13 months. If you get paid 24 times, then that's 12 months. Okay, so your math is going to be slightly different. So if your salary, just for the sake of this exercise, just divide by 12. All right, so now you have your monthly number before taxes. What you need to do then is, let's assume, and I'm just using this to be conservative, but let's make an assumption that you are getting a conventional loan and that your maximum debt to income ratio can only be 50%. Now, there are some different loan products that will allow you to go a little bit higher. And then there are also different situations where you won't be able to go this high. You may be restricted to, say, 45%. And some of those reasons could include you're getting down payment assistance, or there may be some overlays with whoever the bank is that you are using. So again, let's just use 50%. So let's take that $5,200 and we're going to divide by 2 because that's half. I now have $2,600 a month available in debt. Well, I'm going to go ahead and break it to you now. Spoiler alert. You are not going to be allowed to use that whole $2,600 as your mortgage payment. Usually they're going to cap it somewhere around maybe 43%. You may be able to go a little bit higher if you have like good credit, but and you don't represent like a big risk to the lender, but you're not going to be able to have all of your debt as a mortgage payment. But with this, whatever number it is, you need to start to subtract whatever debts you have currently on your credit report. So take a look at your credit report, or maybe you already kind of have it memorized, and think about your monthly debt obligations that include, but not limited to, your obligation for your student loan payments, your obligation for any automobile payments that you may have or may be co-signed for, and also any obligation for any installment debts that you might have, or any revolving credits cards that you have. So whatever those minimum payments are. You want to take all those minimum payments, you want to add it up, and then you want to start subtracting from here. So let's pretend that the only debt that I have, let's say a $400 a month car payment. And I have a $400 a month student loan payment. Well, here we are. I can no longer afford a $2,000 mortgage payment, even though I had a $2,000 rent payment. And the primary reason is because we consider your current debts that you already have against you. We have to factor that into your risk profile to see if you can really truly afford this and you have what we call the ability to repay. So go through that exercise on your own so that you understand what monthly payment you qualify for, because a lot of people don't realize we don't give you a purchase price that you qualify for. We qualify you for a payment. And that payment may allow you a $600,000 house if the interest rates are super, super low. And that same payment may shrink down what your purchase price is if the interest rates are really, really high. So keep that in mind. And if you guys have any questions, comments, or concerns, let me know. But please make sure you like, share, and subscribe to this channel for more information that's going to help you get into your home in 2024. Y'all have a great day.